What's up, guys? Good morning. Today is Friday, November 18th, 2022. We're breaking down another trade for today. I did take a loss today because my bias was bullish, but yeah, it happens sometimes. It's all right. It was just a -1 hour, and I decided not to trade anymore. Usually, I do 2 trades per day, but I did stay up and I did monitor this trade. And if I would have taken this trade, it would have worked out for me. Because remember, we uh, always have an upside move, and we always have a downside move, right? All right. Well, let me break down the the downside move, which is the one that was the winner for today. So check this out. Check this out. All right. All right. So New York session open. 5 in the morning again. Wake up 4:30. Check out the market. See how it is. Today, higher time frame. Coming from the higher time frame, we're looking at these higher time frame order blocks. Let's say the 4 hour here. There is a lot of price action here that's efficient. Okay, and what I mean by efficient is that there isn't really any missing price. Delete all this stuff from previous trades. There isn't a whole lot that needs to be mitigated, right? So everything is super smooth. All the price has been mitigated here. So overall, we are still in a bullish trend. However, we don't really we only see this as direction. So for the higher time frame moves, I'm looking at this area, I'm looking at this area, I'm looking at the running of this liquidity, that liquidity right here from London move, and obviously the top. But all our meat and potatoes are right here, because all we really need is 20, 30 pips to be able to catch a good trade, a good risk reward trade. So what I'm looking for here is these bearish order blocks coming down. We have a liquidity trend right here. This is mainly why I took that buy, because I saw exhaustion to the bottom. So I'm thinking, okay, well, we're gonna come up to sweep these highs again, and I got stopped out. But I did manage to get the reversal as well, because we also are forming, if you can see here, exhaustion to the top. So this candle right here is manipulation. You see this candle right here is sweeping the highs, sweeping the lows before the banks make their move, right? So what I'm looking at here is this 2 hour area of supply, because it's the clearest, right? And this is a really good, let me tell you guys, this is one of my favorite order blocks, because it's a high probability order block, right? So you have price descending here, and then you have two bullish candles right here, and then this bearish candle sweeps the liquidity of everything else before it takes the market down. This order block right here is a high probability order block, and I've back tested it, and it's probably one of my favorite order blocks. I mean, this is the same one over here, this one right here, but notice how this candle swept the liquidity from everything else all the way over here, right? But this is pretty much the same thing, but reversed on this side. This candle right here swept everything to the left. So when it comes back to test this order block, it's a higher probability move that this order block is actually going to hold. And you look to the left, there isn't any inefficient price, right? Even as we cycle down to the time frames here, all the price has been mitigated. So I did keep an eye on this trade, but I did not execute. But I will show you the breakdown nonetheless. So coming into a New York session, 4 o'clock, I know that this is my range between these two 2-hour order blocks. 2-hour order block, 2-hour order block. This is my range here. And now we're in an area of supply. We're in an area of supply. And I think this is around here, somewhere around here is where I took my trade at. It doesn't matter. I'm going to show you the winning one. Then maybe I'll go back and show you where. I have to see exactly where because I deleted the thing. All right, so what I'm looking at here is this 15-minute order block over here, right? Over here, and then there's this one over here. And then I'm looking at different time frames to see if there's any correlation. This big one right here encompasses everything else. And this doji here, this looks like a shooting star, kind of like doji over here. It's a good sign for reversal, which I didn't look at the 25-minute time frame. Maybe I would have, but you know, it is what it is. Sometimes we lose, sometimes we win, sometimes we lose. So I'm looking at the 15 minutes. It is 4:45. So now let me go to the 5-minute here to put it into perspective here. Okay, so we're right in between the previous lows and previous highs, right? So we're in a good area of like, which way are we gonna go? So I'm waiting at this point for price to, where was it? Yeah, so for price to come into this area before I take a sell on this area, which I didn't. Full disclosure, I did not do that. I did not take the sell. At the same time, you look at the 5-minute, everything is nice. Price is very, very efficient, no missing price or anything like that. You could have also done this. You could have also taken it off of this because this was a pretty good one over here to the top and then ran into this one, or you could have done it. I don't know, sorry guys, my new mouse is kind of wanky here. All right. I really like the 7-minute order block too. Let's see what's on there too. Yeah, so bullish, bearish, bullish order block here as well. And it kind of correlates down here, but you know, price is pretty efficient. So what you could do if you wanted to take a trade, you could take a trade here. It comes to the area of supply, but we're going off of the 15 minutes. So let's stick to that. The reason why I didn't choose this order block over this one is because price is efficient. Now, had I just pulled the trigger when price came into my area of supply, I would have gotten stopped out because obviously either two things are going to happen when price meets a point of interest for you. Two things are going to happen. Three things are going to happen. It's either, dude, what's going on the mouse? It's either going to come in, reject, and go to the downside, or it's going to hang out in this area and then come down. That's kind of the same thing. Or it's going to break through it, or it's going to break it and then come down, run the liquidity and then come down, stop people out and then come down. So those are basically the things that are going to happen. 3 scenarios, you know, fall, hang out, then fall. No, that's part of the thing. So fall, break through, or run the liquidity and then fall. So those are the 3 things. So you got to be, so how do you prepare for those scenarios? Well, you prepare for those scenarios by not taking the trade when it hits your order block area. You wait until you see a rejection candle. You wait until you see the right entry parameters for whatever your strategy is. So mine, I saw this. I'm like, okay, yeah, I could have taken it right here, put the stop on top. Okay, that would have been okay, but I want to see a little more confirmation here. All right. So what I wanted to do is I wanted price to come meet this area. And you know, technically I'm a little more conservative when I trade. So I waited for a retest or a mitigation of this missing price up here before I took it, but technically you could have done this. Technically, this was an okay trade. Okay, it went to your area. You already know, you have the benefit of the doubt that this liquidity has already been taken out. They already took out the liquidity. You already stopped some people out that you know, even with spread, it just took it out. And that's a good little 1-minute order block right there, right? So you already have that. So it's a higher, just by waiting for this to happen, you already increased your chances of your trade going in the right way. So then you 7 pips, like let's say 8.5 pips, and it's a little bit bigger of a stop loss, but anything under 10 pips is good because you only need 30 pips to get it right. So, for example, if I was monitoring this trade, I would have probably taken 2 entries, maybe an 8.5 pip stop, and I would have waited for this mitigation here. So let's see. And I think that is what happened, yeah. So then this is where I didn't take the trade, but where I mentally took the trade. Paper traded this one. So then now my stop is 5 pips. And now, let's say I took both of those trades. Now this is a 5 to 2, and this is a 1. Let's take it all the way to 1 to 3. Yeah, because that's where we want. Otherwise, it's not worth it. Okay, and we commit to those. We commit to those. All right, so let's keep going. Let's see what happens. Okay. Okay, so now we have 2 possible entries, and then our target is the bottom of this liquidity down here. So now we're in 0.5% each, and it keeps going and it keeps going. All right, and bam, there it is. It hit our take profit. All right, so there it is. The first one was a 1 to 3. The second one was a 1 to 5. So 8%, a total of 8R for today. And really the reason why I didn't take this trade, I usually take 2 trades a day. The reason I didn't really take this trade is because, full disclosure, I didn't sleep very well last night. Yeah, and honestly, it's as simple as that. I did not sleep very well last night, so I woke up and I was really drowsy, and I didn't trust myself, my mental state, to really be 100% here. But, you know, luckily my bias and everything pulled through, but I'm okay. So today we got an 8R, okay? Today, this morning, we got an 8 risk to reward. So how could you have cut this whole trade here? Because obviously you still need to manage it, you know, and obviously the price kept going, but we're just targeting the first target. Now at this point it's like 6 o'clock, you know, I probably would have still been awake at that time, but I went back to sleep around once it ran this liquidity, I went back to sleep. But you know, we got an 8R. I mean, what more do you want, you know? Let's keep going down. Let's see how much let's see how far the trade actually ran. Let's see how much we actually cut. Yeah, it probably went to the supply. See how it came up from here, from this 2R to this 2R? That's our range, you know. And you know, I should have taken that into consideration, but you know, it is what it is. It is what it is. I missed an opportunity today, but there's always one tomorrow. So let's see what happens. Okay, yeah, perfectly. So we came all the way down to our 2 area of supply. So for a total of 1 to 6 and a 1 to 11. 1 to 6 and 1 to 11. So that's a 1 to 17 RR. Okay, if you would have done it if you would have done it with 1% risk. Okay, so obviously we cut that in half because usually if I take 2 entries around the same area, I do half of a percentage. So it's like an 8.5 RR with 0.5%. Okay, so obviously if we're talking about a 100K account, that's 17K, you know, and obviously, you know, simple math, easy math, that's 8.5K in one trade, right? So that is the math. That is the math here. That's what we're doing. That's what we do every single day, right? Every single day. And I'm telling you right now, full disclosure, I don't have $100,000 account. If you've been watching like the videos that I've been posting, probably like the one or two guys that watch this, you understand that I'm trying to get a 100K account, but I do trade my small account. I have like eight grand in that account because I'm just a normal guy. I'm a mechanic. I have a part time at O'Reilly's, guys. You know what I mean? So, I flip cars. I'm a hustler. That's what I do. I'm basically a hustler, and I've been studying this for 3 years already. And the last year I took it seriously, and I'm starting to see that, hey, maybe I can do this full time. But that's the journey that we all take, isn't it? Maybe I can do this. You go from the discovery phase to I kind of get it, and then you go into the confusion phase because you realize that there's so many strategies, and then you go into the serious phase. You pay for some tutoring, you figure out, and then you go to the disheartening phase, like, oh, this shit's a scam, I can't do it, blah blah blah. But then that's when your grit comes in. That's when what you're really made of, who you really are, has to come in, and you say, fuck this, I want to be a pro trader. I want to make 17,000 a day. I want to make 8,000 a day. I want to do what other people and millions of people do around the world, a small percentage. I can do it. And then you apply yourself, and then you start working on your psychology. Then you start figuring out how to do it properly. And then you start committing, and you start waking up at 4 a.m. You start stretching. You start journaling, you start backtesting, you start actually doing it, and you just blindly believe in yourself, and you bet on yourself until you finally get there. And let me tell you guys, I'm just a normal person. I still haven't gotten my funded account, but I am inevitable. I believe that because I see, and I do this every single day. Every single day I see stuff like this. More so, I take more losses than wins. Full disclosure, I take way more losses than wins, but because of my risk management, if I take 2, 3, 4 losses a week, this would have totally wiped it out. This move right here would have totally wiped it out. And the other day, there was like a 1 to 22 and a 1 to 15 and a 1 to 7, 2 1 to 7s back to back. So it doesn't really matter. Once you got your risk management, it doesn't matter how much you lose. I don't even look at losses the same way anymore. It's just part of the process. It's my dues. You know what I mean? So yeah, guys. Sorry for going on a rant here, but I wanted to break down because I wanted to stay consistent in posting these videos. I know there's nobody watching this right now, but maybe for the one guy that's watching this, hey, you know what, man? If I can do it, so can you. So if you have any questions, ideas, just shoot me a message, and we'll get in touch. All right, see you guys.